Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about should you buy a property in your personal name or should you be buying in a limited company? Now this video, I wouldn't have even thought about a video like this 10 years ago. You see, I've been in property for 24 years now. So 24 years in property. And this wasn't even a thing. So we're going to jump into this. But before we do, make sure you check out the pinned comment below where you can join the Property Accelerator for just £1. Like the video, that really helps with the YouTube algorithm. And why not subscribe and hit the bell? We've got new content every single day. In fact, we're considering making 2 videos a day, one with the news and one with property education. So make sure you subscribe for that. So, limited companies versus personal. Now, I bought my first property way back when in 1999. I was 18 years old at the time. And when I bought that property, I was a Burger King manager and it was quite affordable. In fact, the deposit was £3,000 back then. And that's in Dorking in Surrey. Now that property is worth around £250,000 in today's market, which is pretty good. Now, where this gets interesting is property has changed drastically. And so what we used to do was just buy in our personal name. So I have properties like that one that have gone up in value. Then I've released equity from that and I've bought additional properties in other areas like Hastings, Doncaster and London. Now, by doing that, I've built that portfolio in my own name. Now, for years and years and years, when I made a payment on my mortgage, that would be an expense. And that's normal in business, right? So if you're a business owner, you deduct the expenses and then you pay tax on the profit. That's how businesses work. And the government came in with a new legislation called Section 24. Now, this is really unfair, I believe, as a rule for business owners and property investors. So what they've now said is Section 24 has been in for a few years and it gradually got worse each year. And now it's at the full impact. So let's just say, for argument's sake, that you got £1,000 in rent and your mortgage payment was £500 a month. That's a pretty standard deal, right? That would work all day long. Now, this is different. This has changed considerably. So what's happened now is what you would normally do then is you'd say, look, I've made £500 gross profit before my taxes, and that's what you're going to pay tax on, £500, right? That's fair and reasonable. Now, if you're a higher rate tax earner, let's just say you pay 50% tax, your tax is going to be 250 quid and you're going to keep 250 quid. Great, fair, everyone wins. Now, this has changed. This has changed with Section 24 drastically. So now what they're saying is all landlords cannot deduct expenses like mortgage costs, right? You can deduct maintenance and stuff like that, but they're not really a big part of your costs. Your maintenance should be less than 10% a year. So you now will pay tax on the gross amount up here, right? So you're going to pay tax on £1,000. Your mortgage is going to stay the same. Could have left that. So your mortgage is still going to be £500 a month. But if you've got it in your personal name, if you're a higher rate tax earner, which landlords can easily get into quite quickly, you're going to pay tax on that. Let's just say that's 50% tax, which is not far off. So you're going to pay 500 quid in tax and you're going to make £0. Out of that £0, you've got to pay for void, maintenance, estate agent costs, all other costs of running that property. Why would you do that? And because of that, a lot of landlords are leaving the market. They're just stressed out. They're not making profit. Interest rates have gone up as well. It's got really tough for people that own in their own name. And so another problem is you might think, okay, what's the other option? Well, the other option is that you run it in a company. So that's personal. Now let's have a look at running it in a company. So if you run it in a company, you pay your 500 quid mortgage as well. Now you can also deduct other expenses. Now running a company, you could easily have things like your maintenance is an expense. You might put your mobile phone in there. You might put your broadband in there. You might put your fuel costs in there. So let's just say that you've got expenses of another 200 quid. Then that's great. Now you've got 300 quid profit there. And that's what you're going to pay tax on, right? That's what you're going to pay tax on. And so let's just say the tax is around 20%. It's changing at the moment, it's going to go up to 25%. Well, let's just say it's 25%, right? It's 25%. You're going to pay tax in the limited company of £75 as opposed to £500. It's a very big difference here. Now, what will also benefit you is if you put your deposit into the limited company, that's a loan, then any profits that you take out for years, because the deposit's a big chunk of money, you won't actually pay tax for a long, long time anyway. And that's why you might do this as a limited company. And that's how we launch properties now. I've got a property portfolio that I'm building for my two daughters, Georgia and Amelie. And so that's what we've done. We've got a limited company where we're running these properties for the girls. Now, here's another question that you might be thinking. Why doesn't this person move their property into a limited company? Well, here's the problem. The problem that you've got by doing that is the fact that if you do that, you're going to have to pay all the fees again that you do when you buy a property. That includes stamp duty. If you've made any profit on that property, which you likely have if you bought it, particularly if you bought it before 2020, because the prices have really gone up everywhere in the last few years, you're going to pay capital gains tax on that as well. So you're going to pay capital gains tax on your profit, right? You're going to pay stamp duty again on there, and that could cost you tens of thousands of pounds to move it into a company. That's why landlords are just selling up. They're selling up in droves that own it in a limited company, in their personal name. The people that are doing really well are the ones that are either mortgage free, that helps if you don't have a mortgage on this, or they're starting to set new deals up in company structures. So this is a big opportunity for people. So the opportunity here is that you find a distressed hired landlord that owns in their personal name. You then take that property on from them and you use a limited company to run that property. When you do that, your tax is going to be significantly lower and you are going to be able to run that property efficiently from day one. This is what the government wants. They want people to be more professional landlords. It's easier for them to manage companies, keep an eye on the tax you pay, all of this sort of stuff. With personal, it's harder for them to collect the tax, to know what's going on and all of this sort of stuff. And that's why they want us to be more as a professional landlord. And so the question we asked at the beginning of this video is, should you invest in your personal name or should you invest in a company? If you want to buy one buy-to-let and you're a lower rate taxpayer and it doesn't push you into the higher tax threshold, then maybe you buy in a personal name, right? Maybe you buy in a personal name. If you want to have less tax, you have children that you want to inherit your property portfolio, you can use a limited company structure and pass that on to them without inheritance tax as well. It's way, way, way more tax efficient. And that's what I would be looking at as a property investor. So that's my thoughts on it. We actually cover this in the Property Accelerator, which you can join for just £1 for 7 days in the pinned comment below. Do give me your comments or questions below. Do smash the like button on the video, guys. Do check out all the other content on my channel, including this video right here.